Everybody, Chuck Barone. Thursday, April the 20th, 2003. Big day today, guys. Lots of data, lots of stuff to talk about today. But before we get rolling, I want to welcome everybody to the show and let you know how much we appreciate you guys being here. Appreciate you guys watching these videos. I really do. Okay, so let's get right into this today. Markets today, tough day. A lot of mixed data coming up. We'll go through every little bit of it. Just quick news today, though. Stock market today down. Not good day for the market. Not a horrible crashing day, just a down day. Dow down 110 points, 33,786. S&P down 24, 4,129. NASDAQ down 97. The index at 12,059. Tough day for stocks. Not a great day for earnings. We'll get into that a little bit in the commentary. Bonds today, picking up a little of that money from the sell-off in stocks. Yields falling. The 10-year sitting at a rate of 3.54%, down 6 basis points. The 2-year dropping 10 basis points today, down to 4.15%. I think recession fears are in the air now. And I think that these rates, they've just been so all over the place. The way the data looks right now, I believe rates probably going to come down a little bit. The dollar today, not much activity, down very small by like 0.16%, something on the index, sitting at 101.83, pretty much unchanged. Metals today, gold and silver, good days for the metal market today. Gold up $10.60, 2,570. Silver up 3 cents at $25.28. These are good numbers for gold and silver, guys. What they're doing now is consolidating, shaking out the weak ones, consolidating at these prices above $25 for silver, above $2,000 for gold. I think once they get this consolidation process finished, hard to say how long that'll take. Hard to say how many weak hands there really are in these markets who will sell into this rally. But anyway, I think that once they get this consolidation finished, which they will do, I think gold and silver will start their next leg up in this rally. Oil today, well, I got to say I was right here, guys. I told you, oil wants to be in this trough between $75 and $80. We kind of got shook up a little bit when OPEC came out with their, we're going to cut our production again. So the market spiked back up, closing in at $85. Today, down another $1.87 per barrel. West Texas Intermediate coming in at $77.29, it looks like. My own handwriting, horrible, sorry. But so oil prices right back into that trough. I really don't see OPEC coming back to the table with another cut. These are countries that, as much as they would like to pretend they're unified and all good friends and everything, they're not. They're all super greedy. So a lot of them, when they promise these cuts, never end up doing it to get more money. So we'll see. But I think oil's kind of in a price range that's comfortable. I think it's going to stay between 75 or 80 until news comes to drive price up. If we don't really get news to drive the price up, I think it could collapse down under $70 per barrel, which would be nice. Because, I got to say, as soon as the price spikes up a little bit in oil, shows right up at the gas pumps. Price could come down $10, $20, $30. Doesn't show up at the gas pumps at all. I love our corporate America. We're awesome. Anyway, oil in a price range, I think it's comfortable right now. Bitcoin today, not another tough day for Bitcoin today, down $1,133, sitting at $28,131. Bitcoin kind of going through the same process that gold and silver are. Trying to consolidate at 30,000. It had briefly broken above it. I think that it probably, it's really hard to say. I don't know enough about Bitcoin like I would say gold and silver to really make any kind of prediction here. I think that Bitcoin wants to go higher. There's so much damage in the crypto sphere right now, making people fearful to get involved, especially real money people. So I think that we'll see where Bitcoin goes. I'm going to be reading a little more about this, trying to bring myself up to a little bit more, at least master's degree level on Bitcoin and other cryptos. But right now, Looks like it's still a reasonable number, 28,000, well off its lows. So Bitcoin, down day, but hanging tough. News today. Well, we knew today was going to be the day. This is the day of the week. All kinds of data coming out today, guys. Crazy numbers. Anyway, let's get right into it. Jobless claims. This was the one we were looking for. Jobless claims coming in at 245K, up from 240 last week. The Federal Reserve having its way. More layoffs reflected in the index. More layoffs announced. Disney, Meta, another big round of layoffs. So it sounds like the Fed's having its way in the labor market. We've known, and I've been talking about on this show for a while, how the Fed believes that, this strong jobs market is driving inflation higher. Companies paying higher wages, offsetting those costs by raising prices. Well, the Fed wanting to tamp down this super hot jobs market. These numbers show, even though still, 245K is not a gigantic number. It's not, oh my God, recession time yet. But the numbers continually ticking up every week, showing us that the jobs market is weakening a little bit. Not weak, but weakening. News we need today. Well, here's some stuff, guys. The Philly Fed Manufacturing Index. Philly Fed's a big survey. The current index. Okay, so last month, the index sitting at negative 23.2. So manufacturing obviously pretty badly contracting. Analysts had expected this month's number improving to negative 19. Okay, well, the numbers come out and the market collapses to negative 31.3. So they thought it was going to go, the misery of it, the contraction was going to go down. The number would come up a little bit. Instead, it went down, and down big. Now this has got recession signals flashing everywhere. All of this news today showing, the Fed is they're going to have this recession. The Fed actually using the phrase mild recession. They're just trying now to pinpoint when it's going to start. A lot of people believing we're already in recession. The numbers, the way Wall Street calculates recession, not so much. But if you're in real estate or a mortgage guy, you've been in recession for a while now, although numbers are improving for mortgages and real estate. So, Philly Fed, crunchingly bad numbers. 10% more, 10 times, not 10%, 10 times more manufacturing companies saying their sales are down than saying their sales are up. That is pretty bad. And that's, results. New orders for manufacturing also slowing down, contracting pretty heavily. So manufacturing heading to recession. And the thing that really moved the market today, though, was earnings, man. Earnings coming in. They had been kind of mixed. Most of the earnings had been beating estimates. Around 75% had been beating estimates. But today, we got some pretty big companies coming in reporting crappy earnings. Tesla, AT&T, American Express, all reporting lousy earnings. So Amex affecting the Dow, Tesla the NASDAQ, AT&T, it's not one of my favorite companies. They've been around forever, but their earnings were crap. Surprisingly, D.R. Horton comes out today and beats their estimates, showing demand for new houses is rising. Now, I don't want you guys to confuse this with, there's always been demand for housing, but even with prices high and rates high, okay, people want to own a house. But what's been happening is the amount of existing homes on the market has been contracting because people don't want to sell their house with a 2 or 3% mortgage for another house where they're going to get less house for the money, and they're going to have a 6.5 or 7% mortgage interest rate. So people reluctant to sell, putting a crunch in the market because, most people are going to buy an existing home. Some percentages are going to buy new, but most people buy existing. And, without much of an inventory, prices now have been holding steady because, there's more buyer than seller, right? Now, what the builders have been doing is taking advantage of this shortage in existing homes, and they've been offering buyers fat incentives, buy downs on their rate, incentives on closing costs up to $5,000 or $10,000, incentives on the build out. We'll give you, whatever kind of countertops or cabinets or some kind of upgrades in the house. And it's helping, and shows D.R. Horton today kicking it out, right? Interestingly, though, they were saying, I was reading this this real estate guru was talking about existing homes numbers. We also got that report today coming down pretty bad, down 2.4% from last month. Crappy. The annual rate is now coming down pretty bad too. And the real estate guru who was reporting this called this a unique housing market with high prices and high rates, not very much to choose from as far as buying existing houses. Sellers reluctant to sell. It's a unique housing market, also known as a really crappy housing market. Real estate experts I was reading today, expecting, after all this fun and games is done and the recession and everything that's coming, expecting mortgage rates to finally settle and hold at around 5.5%. They feel like that's the sweet spot, and that that would be a rate high enough to stimulate lenders to want to lend and borrowers to want to borrow. Interesting. Savings account rates are now at the highest level they've been in 15 years. Everybody get into the game, right? First, banks didn't want to raise rates because they didn't feel like they needed the money. Then we saw Silicon Valley Bank, Republic Bank, and all these other regional banks freaking out. So now everybody wants to hold on to people's savings. Even Apple getting into the game. Apple offering savings accounts now to Apple people, offering 4.15% annual rate. Interesting stuff, right? Oil prices coming down. The OPEC shock was a shock for about a week. And now oil prices going to where the demand shows it should be. It's just, I'll tell you guys, it's the vibe in this country now is turning pretty negative. A lot of the results we're getting turning pretty negative. Interest rates having the effect they're supposed to be having. And I think now really starting to pummel consumers who are saddled with just massive amounts of debt. Can you imagine the numbers people are dealing with every day, guys? $2,000 a month for rent, $700 a month for a car payment, 20% interest on an average $7,500 bank, credit card balance, student loans, outrageous numbers for utilities, power. They just raised my freaking power bill to $400 a month. $400 every single month I got to pay just to have electricity in my house. The gas company prices up on everything across the board. I got to tell you, bro, how on earth is a regular working guy, average income about 40 grand, average United States household income average 76 grand. How are these guys doing it, man? How are they doing it? I don't know, and it does not bode well. I think we're going to need this recession to just get rid of all the junk and all the crap in this economy. So we're probably going to see one. I think it'll feel worse than the weird faux recession we had last year, because it's going to be a real one. So we'll see business contractions and layoffs and crappy earnings and stock market declines and lack of demand. But I think people... we'll see where it all leads, man. It's just, the vibe is turning negative, even mine. Even the Federal Reserve talking about a mild recession. That's kind of, that's about as funny to me as a soft landing. And they have these stupid phrases they use. Bottom line, Fed wants a recession. Oldest Wall Street rule since 1913, don't fight the Fed. The Fed will get their recession. We're going to be the victims of it, so please follow the directions we've been giving you guys since day one on this show. Hold on to your money tight, man. Invest it conservatively. Prevent loss of your money. Don't lose money right now. Try to get out of debt. Don't add new debt if you can possibly help it. Play it close to the vest, guys. I think that we got some tough times coming here, and if you can make it through without big losses or, significant damage to your financial health, I think there'll be a brighter day coming. At least I hope so. Anyway, that's it for the day, guys. I windbagged way too long yesterday. I appreciate you guys taking the time to watch these videos. We love your support. We'll be back again tomorrow to wrap this week up. Probably a very short video, not a lot of data tomorrow. We'll see where earnings come. But until then, guys, take care. See you tomorrow.